Hey there, Singaporean investors. Tired of sifting through endless news trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguana's daily SGX Market Digest for Thursday, August 7th, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and my unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I also focus on regional and global economic trends, giving you that broader context. So let's dive into today's most important SGX movements. You don't want to miss what's impacting your portfolio right now. The Straits Times Index rose to 4,246 points today, gaining 0.43% from yesterday. Over the past month, the index has climbed 4.89% and is up an impressive 30.16% compared to the same time last year. Not bad at all for our local market. Let's start with DBS Bank, the star performer in today's banking earnings. The bank just delivered a solid Q2 2025 performance with net profit rising 1% to $282 billion. That might sound modest, but here's what caught my attention. They beat analyst expectations. More importantly, they're paying shareholders handsomely with a total dividend of $75 per share this quarter, up from $54 last year. Their shares closed 1.3% higher at $48.80 yesterday, showing investor confidence. What really stands out? DBS is showing smart balance sheet management with strong deposit growth and proactive hedging strategies. Their net interest margin dropped to 2.05% from 2.14% last year, but that's expected with the rate environment. The bank's non-performing loans ratio actually improved to 1% from 1.1%. This tells us DBS is navigating the interest rate cycle well. Now let's talk about UOB. Things weren't as rosy here. Q2 net profit fell 6% to $1.34 billion, missing analyst expectations. Their net interest margin took a bigger hit, dropping 14 basis points to 1.91%. However, they're still rewarding shareholders with an interim dividend of 85 cents per share, plus that special dividend second tranche. UOB shares closed up just 0.2% at $36.45 yesterday. What does this banking tale tell us? DBS appears better positioned for the current rate environment, while UOB is facing some margin pressure. Both banks remain solid dividend plays. Here's where things get exciting. Yangzijiang Shipbuilding just posted record-breaking results for the first half of 2025. Net profit surged 37% to RMB 4.2 billion, which is about $752.6 million. Even better, their net profit margin jumped from 23.4% to 32.5%. The stock closed 2.3% higher at $2.63 yesterday before results were announced. What's driving this incredible performance? Lower steel costs, smart contract pricing, and smooth delivery of those high-tech dual-fuel container ships. They've got a massive order book worth of $23.2 billion that's scheduled for delivery through 2029 and beyond. 74% of their order book consists of green vessels, positioning them perfectly for the sustainability trend. This company is basically printing money right now, with their gross profit margin hitting a new high of 35%. For investors, this shows how a well-managed industrial company can thrive even in challenging times. Venture Corporation shows us the complexity of today's tech landscape. Second quarter net profit rose slightly to 57.1 million, but for the first half of 2025, they saw an 86% dip to about 113 million. The stock closed down 0.8% at $12.72 yesterday. What's happening here? Some customer domains are still soft, but they're seeing business wins across multiple technology areas. They're maintaining the dividend policy and have a rock-solid balance sheet. This is a classic example of a quality company managing through cyclical headwinds. Let's move into a quick fire round for other notable moves. SATS issued $300 million in fixed-rate notes at 2.45% due in 2032, showing they're proactively managing their debt profile with favorable rates. The stock dipped slightly to $3.21. CSE Global secured $211.3 million in new second quarter orders, up 3.8% year on year. Their electrification business is driving growth, particularly from data center demand. Shares closed 0.8% higher at $0.675. The Straits Trading Company expects to swing to a net loss for the first half of 2025, mainly due to fair value losses on UK investment properties. However, these are non-cash losses, and the company maintains it has a healthy financial position. Let's pull all of today's movements together. What we've seen today really highlights the tale of two markets. Those companies executing well are being rewarded, while those facing headwinds are getting punished. The most crucial takeaway today is the divergence in banking performance. DBS shows that proactive balance sheet management and strong operational execution can still deliver results, even in a challenging rate environment. Meanwhile, UOB's margin pressure reminds us that not all banks are created equal when it comes to navigating rate cycles. Yangzijiang's record performance underscores something I've been talking about. Quality industrial companies with strong order books and margin discipline can thrive. Their green vessel focus also shows how ESG trends are creating real business opportunities. For retail investors like us, today's results reinforce three key principles. Quality management matters, as companies like DBS and Yangzijiang are showing superior execution. Dividend sustainability is key, so focus on companies that can maintain or grow payouts through cycles. And sector positioning matters, with green shipbuilding and data center-related businesses showing real momentum. Think about how your portfolio aligns with these trends. Are you positioned in companies that are actively adapting to changing market conditions? That's the scoop for the SGX today, Thursday, August 7th, 2025. Navigating these daily market shifts is crucial for your wealth growth right here in Singapore. If you found this digest helpful and want to get my real-time analysis, urgent insights, and a daily heads up on crucial market movements delivered to you up to a week before anyone else sees them, then our premium membership is for you. It's just $3 a month, about the price of a cup of coffee. Think of it as your daily dose of market foresight directly from my desk. Ready to stay ahead in the Singapore market? Just click the link in the description below to become a member. Don't forget to like this video, share it with your fellow investors, and leave a comment below with your thoughts on today's market. I always read them.